Psychology. Hello guys, today we will talk with that section. We will talk with you about the psychology of the trader. Most of the traders in the world, they think that the psychology is about 80% of the trading is psychology, and I would quite agree with that point because the psychology plays a most significant role in the trading. Maybe your knowledge or your trading system and risk management is about 20-25%. The rest of it, the remaining is the psychology. And I would like to emphasize today the pretty important part of the psychology for mistakes, which psychological mistake which traders are making in the trading. The first part of the taking of the risk, because when we are wrong, assume that wrong thing that taking the risk is just putting, let's say, on the risk just $100, let's say, and it's about taking the risk. No, the taking risk is about like accept your decision, the outcomes or the circumstances of your decision. It means that when you, let's say, your trading system is built under a trending line, so when it touches somewhere here, you are open the trade, and then it's second time open trade, and your stop loss is second time it touches somewhere here. You are take your risk is your stop loss is somewhere here, but it doesn't touch your stop loss and goes up above, and then the next time it touches somewhere here, your stop loss here, and it already touched your stop loss, and as a result, you close the trade. That's the first part. But let's say it's now it's quite okay. But let's say it touched somewhere here, and then goes above. And what would be your acceptance? What would be your estimate? How you will estimate the situation? Would you accept it? Would you accept your that you have done wrong, or you will accept that you have done everything correct or right? In my example, because if you would think that you have done wrong, next time when it will touch your stop loss and go down, you will not close the trade because actually your rules your rules require to close the trade, but you will not close the trade because in the previous case it was just touched somewhere here and got up and had gone above. That's the most important part. But because if you will not accept and you will break your trading rule, believe me, it's just the way when you will finally come to your psychological disaster. It's very important to observe, to follow your own rules and always follow your rules, because if you will break your rule next time, it will bring another disaster because you will lose a lot. So it's very important in that case, in any case, if you have your own rules, you have to follow it, because in otherwise, while you have the rules, you have the rules to follow it. So you have to follow it. If you will constantly break your rules, you don't need the rules at all. That's a part. The second is about breaking the rules of risk management. Let's say you are calculating risk is about $100. You are putting in the risk 1% of your deposit, 2.5, 5% number, but your strict constant risk is $100. But in the some case, you are thinking about, you think that it's better to increase the risk. You are putting in the risk already 200, 300. Why? Because you think that your this trade is most secure one. But if you have same rules for open and for close the trade, one of them should be the most secure one. That's a question. But it brings another disaster because if you are already putting the risk $300, probably it will close with the loss. In the next time when you open the trade with a $100 and your risk reward ratio is about 2 to 1, you will earn $200, but you didn't even close the loss of another trade because in the first case you put on the risk $300. Now you earn just $200. But in the other way, if you follow your risk management rules, you would earn. But because you didn't follow your risk management rules, you lost in the distance. And the third most psychological trick, which actually traders are trapped mostly, it's about the fear. Because when you open the trade and you lost the trade, your mind or your mindset just remember the patterns which was lead to loss, which lead to loss, what did lead to loss. And once you see the same patterns or about the same patterns, you think that it will be about the loss trade. But the reality is that there are a lot of details which should repeat itself to close the trade in the profit or in the loss. So therefore, if your rules require your to open the trade, you have to open it. That's a part. So what we can talk about, it's actual most important free tricks, psychological trick, so which actually lead us to lose our trades or to bring the significant drawdowns. So what outcomes we can take from three different psychological tricks. So it's most important part if you have your own trading system, your own risk management, you have to follow its rules. You will never bring the great significant loss to yourself if you will just follow your own rules. That's the important part. So if you want to learn more about psychological tricks, you want to learn about more on Forex market and Forex trading, just subscribe to our channel. Thank you.